Hey everybody, we're going to talk about one of my favorite financial stocks right now, and that is SoFi, ticker symbol SOFI. The stock has more than doubled since the middle of 2024, which begs the question, is now still a good time to buy? Is there still some upside ahead of it, or is it overvalued? So we're going to dive into that in just a second. Before we do, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy from the Motley Fool. They're the sponsor of this video, and it is the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. So let me go ahead and share my screen real quick. So there we go. So like I said, even after a recent pullback in the market, SoFi is up 130% since the middle of 2024. That's from the beginning of July. There are some good reasons for the increase. The company continues to grow rapidly. We're seeing a lot more investor interest in purchasing loans that SoFi is making. They've done a good job of building out the platform, but I'm getting ahead of myself. And if management continues to execute and just keeps doing what it's doing, there could be plenty of upside ahead. SoFi is still a relatively small bank. It has about $25 billion of consumer deposits. That puts it at about 1/5 the size of Ally Financial, which is not itself not a giant bank. So it still could have a lot of room to grow. Let's just recap some of the big highlights from 2024. So you can see it finished the year with over 10 million members. That has roughly 5x since the company has gone public. That's 34% year over year. And there you can see right there, 10x growth over the past 5 years. So they hit a million users 5 years ago. They just hit 10 million users, and that could be just the starting point. Products is, if you have a loan with a company that's considered a product, they're just shy of 15 million products. So one takeaway is there is a lot of room to cross-sell products to its existing members. I know for a while the average Wells Fargo customer had about 6 different products with the bank, meaning like a checking account, a savings account, an investment account, a loan, etc. So right now the average SoFi member has just about 1.5 products with the bank. So it doesn't just need it. It's not just getting growth from the member base. If it can grow that cross-selling effectiveness, it could also be a big win for the company. You can see record loan originations. I mentioned already, they reached $25 billion in member deposits. That's right there. New robo-advisor platform. They continue to roll out new products. There are a lot of alternative asset products that have rolled out, some of which are exclusive to SoFi members. So these are things that normally only rich people can invest in. And now that SoFi's kind of opened them up to everyday investors, there was a fund that invested exclusively in SpaceX stock, which you can't buy publicly. That's something that was in there. There's a venture fund that you can invest in there. The loan platform business, I'm going to talk about that in just a minute. That's one of the biggest pieces of news from 2024. Launched 2 new credit cards. I think SoFi has some massive potential in the credit card business, not necessarily with these products. If I'm being totally honest, one of my biggest criticisms is neither of these are very unique. The cash rewards and SoFi essentially. I have a SoFi credit card, don't get me wrong, but it's not a particularly unique or competitive product. I think SoFi has a lot of potential there. If they can just translate the uniqueness of their investment platform and do something similarly unique with their credit card platform, I think there's a lot of room to grow that. And the Galileo technology platform has just had a fantastic year. I'm going to get to that in just a second as well. So you can see this is what SoFi offers today. On the lending side, they have home loans, student loans, personal loans. They started life as a student lender. Personal loans has since become by far their largest loan type. I think home loans have a lot of growth potential for the company. Right now, the real estate market's terrible. Existing home sales are very, very slow because of high mortgage rates. And also, Americans have more equity in their homes than ever, about $35 trillion of equity in homes. And a lot of people will not get a home equity loan or a home equity line of credit or refinancing just because of how interest rates are right now. So as rates come down, that could be a massive, massive opportunity for the company. And then the rest of the wheel is the financial services side. SoFi Money is just is the checking and savings products. There's an investment platform. I mentioned the credit cards. There's a bunch of other. These are like services. Relay helps you track your other accounts and your net worth and things like that. The loan platform business I'll get to, and the technology platform is mostly the Galileo platform that provides kind of third-party financial infrastructure. So this is the member growth, really impressive. I mentioned it's since 2020, it's up dramatically. You can see they added 2.8 million new members in 2024 alone. They expect to do roughly the same in 2025, which I think would be a massive win. But you really need to build out the products, start cross-selling to existing members. They're doing somewhat of a good job of that, but that's an area I'd like to see them improve. I think it's an untapped opportunity if they can really start to cross-sell. But the significance of what's on the screen right now, over time, the success of getting people to come into their ecosystem for financial services products, not because they're a loan customer, creates those cross-selling opportunities. And that's what this really represents right here. So 3 years ago, there were 3.8 financial services products in SoFi's ecosystem, like banking, credit cards, investment accounts, for every lending product. Now that ratio has steadily grown to now there's 6.3 financial service product customers for every loan. So what that means is now, over time, that's going to create a more natural marketing funnel. It's easier to market loans to people who are already in your financial ecosystem. And now that there are a lot more people in the financial services side of the business that don't already have a lending relationship with SoFi. So it creates a lot more opportunities to market loans without a high acquisition cost or referral fees or anything like that, because they're already in the ecosystem. So that's something that they've been doing really, really well. The Galileo technology platform, 168 million accounts are powered by the platform. They've said they want to be the AWS or Amazon Web Services of fintech. Galileo is how they plan to get there, and they just had a couple big wins in the fourth quarter. The U.S. government, the Treasury Department, actually selected Galileo to power one of their debit card products. They're rolling out a co-branded hotel debit card with they haven't named the company yet, but they say it's a leading hotel rewards program. So that could be like another, interesting use for Galileo. So really impressive. And the growth rate accelerated from 2023 to 2024. It slowed to 11% in 2023 and accelerated to 15% in 2024. So really strong momentum there as well. The lending platform is the other big win lately. I mentioned an investment group is put $2 billion of capital up for this. So basically, SoFi historically has originated its own loans, serviced its own loans, kept its loans on its balance sheet. Now it's starting to securitize loans and sell them to third parties. And not only that, but it's starting to originate loans on behalf of third parties right from the start. And then customers, you can see on the bottom, it's called LBP referrals, loan platform business referrals. Customers that do not fit our lending criteria or loan types are referred to third parties, and that generates risk-free fee income for SoFi. If it refers the company to other lenders, someone ends up getting a loan, SoFi gets a little bit of money for that without risking any of its own capital or investor capital or anything. So the loan platform has really grown rapidly in 2024, and that is something that I think the market is kind of overlooking right now. It generates very capital light fee income for SoFi without growing its balance sheet. So I'm a big fan of that as a business model, especially in addition to the rest of its banking ecosystem. Just look at the top and bottom line numbers here. Revenue has grew by 26% year over year. A little bit of a slowdown, but you can't keep up that 50% plus revenue growth rate forever. It's becoming a much more profitable and efficient company. That rate is actually accelerating. You can see their adjusted EBITDA margin growing 3%, 9%, 21%, and 26%. So you can see that's kind of growing very, very rapidly. I think profitability is going to have a couple of very, very strong years. And one thing I wanted to mention about could SoFi go higher? I know this is very small print, so I'm going to read these statistics. From SoFi's interest earning assets, which generally means its personal loan portfolio, but also credit cards and student loans, the average interest rate it's getting from those is about 9.34%. The average rate it's paying on interest-bearing deposits, which essentially means savings accounts, is 3.8%. And that started to come down a little bit. It came down from a peak of 4.29% at the beginning of 2024, and it's been dropping since then. If the Fed continues to lower interest rates, we could see that go down as well, and that would lead to interest margin expansion. So that's another potential tailwind we could see. And not only that, lower interest rates lead to higher demand for loans, just in general. So there's a lot to like about SoFi right now. I think that the gain in the stock price is well deserved. I thought it was ridiculously cheap when it was a $7 stock. It's obviously not as cheap as it was then, but I think the gain was well justified. The business is moving in the right direction, especially with profitability. And I think in a couple years that SoFi will be worth significantly more than it is today. Again, I don't have a crystal ball. I don't know that for a fact, but I can tell you that I have a significant investment in SoFi myself. So I'm putting my money where my mouth is. Tell me what you think about how SoFi is doing, if you think the stock still has a lot of upside ahead of it. And I'll do my best to respond to any questions individually. Thanks for listening, and stay tuned for a message from my sponsor, The Motley Fool. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.